Breakouts are some of the most lucrative trading strategies that traders could use. While most traders are happy with a reward-risk ratio of 1.5 to 1, breakout strategies could yield as much as 4 times the risk on a stop loss. This allows traders to profit so much on any given day. However, this comes with a cost. Breakout strategies are not that easy to trade. Trading breakouts often mean trading against an existing supply or demand area. Many traders often deem trading against these zones as a bad idea. For those who are willing to take risks, however, this is a very enticing trade setup. Often, after a breakout is breached and price has confirmed to have broken out of a support or resistance line, there is usually little to no resistance on the price chart. This allows price to travel far from the entry zone and produce huge profits for breakout traders. There are many ways to trade breakouts. Traders take different approaches to identify these supply and demand zones or support and resistance lines. 5-day breakout forex trading strategy is just one of the many ways to trade breakouts. Breakout indicator is a custom indicator that helps traders identify long-term support and resistance lines. It identifies horizontal support and resistance lines simply by identifying the highest and lowest swing point for the past 5 days. It then draws a green horizontal line for the resistance and a red horizontal line for the support. These areas make a good horizontal support and resistance, or supply and demand zones geared for swing trading. In a way, this breakout indicator is a breakout box for the previous 5 days. This trading strategy is usually applied as a swing trading strategy used by some professional traders and is traded on a week-by-week analysis. This method is a simplified version of such strategy. To trade this strategy, we will be observing for price to break out beyond the support or resistance line. We should wait for a bullish breakout on the resistance line or a bearish breakout on the support line. Then, we observe how price reacts with these areas. In some cases, price would gain momentum instantly and move in the direction of the trade right away. However, this does not happen all the time. Often, what happens is that price would usually test and retest the support or resistance line. Price would often retrace back towards the line before starting a new trend. If price rejects the support and resistance line and shows signs of continuing the direction of the breakout, that would confirm the breakout. We then take the trade as soon as we observe price action showing signs of continuing the direction of the breakout. The trade is then kept open as long as the 10-period exponential moving average and 20-period exponential moving average, EMA, lines does not reverse. The 5-day breakout forex indicator for MetaTrader 4 marks the 5-day high and 5-day low price using 2 red lines. This is a forex breakout indicator. Trading the 5-day breakout forex indicator is pretty much self-explanatory. The default day breakout period is set to 5 but can be easily changed from the indicator's inputs tab. For instance, if you like to trade the 14-day breakout period, set the value to 14. Many of the world's top forex traders trade breakouts for big profits, and we can agree to the fact that although it's not an entirely new concept, traders have continued to take advantage of this idea. The 5-day breakout forex strategy is designed to take advantage of levels where the price moves out of its 5-day trading range. Once price exceeds the range of the 5-day high or low, a breakout is said to occur. Having the understanding that markets usually spend most of the time in trading ranges makes this a worthwhile trading strategy to own in your trading arsenal. Let's dissect the trading setup with the following examples to see how it plays out. Conclusion: many profitable traders trade this method as a weekly trade setup. Often, they would mark the high and low of the previous week as a support and resistance line. Then, they would wait for breakouts of such levels during the first couple of days of the week. If a breakout occurs, then they would trade in the direction of the trade. Some traders would also filter trades based on the trend. They would do this by identifying if the weekly candle of the previous week is bullish or bearish. Then they would trade in the direction of the previous week's candle. These traders also let profits run by closing trades based on a stop loss. They would trail the stop loss and profit every time price creates a